Okay, welcome. Let's do some post analysis before we delve into something else. For last week on Bitcoin, I was looking for buys. I did, I used a different strategy last week, which is one of the things my mentor used to teach us then. Okay, those of us in the elite community, how to take sales, how to take buys when price is dipping, because we're anticipating price to go up. Though I modified it because I didn't want to take buys when price was dipping. What if something occurs? So for Bitcoin yesterday, because Bitcoin acts erratically mostly, so I decided to try to take an early buy. And you see that when we would go to the live chat, you see that that played off. If I had waited to take buys on the break of the structure, it would have reacted negatively, or should have it would have reacted against what I anticipated. So I'm happy I took the buys because I'm happy I took the buys from here. Perhaps I would drop down a little bit to explain what I saw that made me to take these buys. So without much ado, Bitcoin I was looking at taking buys. This was my overall target. But if it breaches this, I was looking at it to continue giving us the blues, okay, or green candles. That's for Bitcoin. When we should go to the live chat to see what played out. For gold I was, yeah, I could have taken it from here, but then again I didn't want to change the whole strategy. Each instrument I'm tuning it to fit with the frequency is giving me. So I don't want, because I twitched it for Bitcoin, I would not twitch it on gold. No. Gold still respects price action to an extent. I know where gold will want to start misbehaving, which would be different from GJ. Okay, each one has its own frequency or vibe at which it operates. So I'm looking at what I was looking at when this started going up impulsively, because if you check, it tapped my area of where I was considering price to start reacting from. But if I just entered by here, that means my stop loss should be somewhere here. Then I'll be looking at closing something at this top, then leaving the runner, which is also a beautiful trade idea looking at it right now in hindsight. But I didn't want to just switch it. If you must modify some strategy or any strategy, it should be done 1% each day. There's no need rushing. Okay, 1% each day. In 100 days, you would have noticed a complete change of strategy. We're trying to change 50% in a day. Oh, you don't want to do that. So for Bitcoin, for gold, I was looking at break of this high for price to continue pumping. I was activated and price started doing what it knows how to do best. Well, my principle is that once I'm filled, my order is filled or activated, it's either stop loss or take profit. I was not going to touch my position. So when we go to the chart, we'll see what actually transpired. For GJ was a bay in the sense that it dipped lower. Now looking at it, once this broke this low here, I would have anticipated sales to come down, because again, it was in the zone where I was expecting sellers to start showing their hands, similar to the other one on Bitcoin, on gold. It entered the zone and turned. Here, it entered the zone and slammed dunk. So again, looking at it, I was like, when I was in my revisiting my trades, I was noticing that this bullish trend going up was very weak, showing that the buyers was disinterested. So I was waiting to see if it will show strong buyers momentum or the break of this high. But then sellers came in very strongly and aggressively. So my sell pending order was activated, or sell stop. This was my TP. This is the stop loss if price doesn't give me what I wanted. Didn't give me what I wanted. So Then what happened? Price just kept dipping. This, as you can see, this is where my TP was. So that is it. It just kept dipping, dipping. Gold did what it knows how to do best. Okay, let's go to the live chart. Let's see what we got. For today, first of all, let's see on the 1 hour. For today, what I'm looking at is quite simple. This is what played out. Is that's why I love my strategy. I don't want to change it for anything right now. Because if you can see, once price just gave me my TP and flipped. Sometimes it could give TP, flip, and come back up like this. So the strategy I built was, even if it flips, comes back up, let it be that it has closed me out at optimal level. You understand? Not as it's retracing and now close it here or close it here. Let it close me at the best optimal level, the best price could give me, or price can give me before I start thinking of doing my cost risk analysis, money management stuff. No. So then another position was entered here, which again TP before it started retracing. So if you're following the strategy back to back, you'll notice that this strategy has been fine-tuned to the point where your TP is actually where price would want to react from. But leaving a position open or some of your position open is in case price continues dipping, then you keep taking something out. So for GJ, what I'm looking at is quite simple. This is an area where I'm expecting price to start reacting from, just like it did the previous time. So I'm looking for potential sales or continuation of the sales on the bearish breach of this low. Then I could take counter trend buys above this level. But don't forget I said it's counter trend. So any moment from here, price could react. Okay, so but sweet sales would occur anywhere above here, this level, because this is the zone that we call our sellers territory. So overall, we're in buyers territory, but this current territory is sellers on the 4 hours, sellers on the 1 hour, on the dailies where we have our buyers territory. So let's see if price will continue dipping, making lower lows. Okay, so this is what I'm looking at on British pound, Japanese yen. If you don't get it, just hit me up. I would reply as soon as possible. You can send me a message in the comment section. Okay. For gold is quite in the same quagmire like GJ. We are we are in 4 hours buyers territory in the overall um sellers territory. Okay, so let's see if this is this is going to do what deep. So potential buys or sweet buys will occur above here, but if we breach this low, we'll be expecting what sells. So this is what I'm looking at. I don't want to take anything from here to here. Just like on GJ, I'm just going to wait for gold to do what it knows how to do best, which is dance. Okay, let it dance. Then if its leg crosses this red line, I know that this is time for some slam dunk. If its leg crosses this is time for somewhat rally. So this is a zone of no touch it. So this is what gold it looks like. Okay. Without much ado, let's look at the last but not the least is GJ. But before Bitcoin, before we look at Bitcoin, look at what I was talking about on gold. I was filled here. It gave me this bearish candle like if this continues dipping, if it breaks this low, then perhaps it's definitely going to reach this this support level, which I've seen price behave like this on several occasions. And if it reaches this support level, nothing stops it from breaking the low and continuing, at least giving us a bottom wick before flipping, because that is good for you. One thing about gold is wicks. Look at it. Wicks, wicks. And gold wicks are not 5-10 pips wicks. Sometimes gold wicks can be as good as your trade for the day. I mean, as good as your trade for the day. So I was just happy when this flipped and continued bullish, because if you look at it, there was nothing, absolutely nothing stopping this candle from breaking this low, because this is a resistance level price reacted from. Those of you who like trading resistance 1, resistance 2, which is double top, you see why it's not good to go against the trend. Then this is where my TP was, I think somewhere around there was filled, but price just kept pumping. This is one thing. The same thing gold did was the mirror effect, was what GJ did. So as you can see, last week gold and GJ were correlating opposite. They call it anti-correlation. Okay, whilst GJ was dumping, gold was what? Rallying. So that is it. Let's look, the last but not the least is Bitcoin. Bitcoin, the erratic one. Okay. Most times Bitcoin just behaves like currency. The other time it behaves like, you know what I mean, just on its own. It's just in a dance party by itself. Okay. Now, when this was where I entered the trade. Just this is a beautiful, beautiful, beautiful entry. Okay, I was using like my mentor strategy, and it gave me my TP. Why did I take this? I learned from my failure here. The lesson I got that taking from the break of the high on gold most times is just not the best move. As you can see, most of the trades that hit TP is actually inside, not at the break of the high. So you get better each day, right? This one, why is this one gave me TP? This other one gave me stop loss. So it was just like zero arrow. This cancelled this. Okay, and it's not as if I closed anything yet. Similar to what happened here. Price rallied, got midway into my anticipated TP, then slam dunked. Price rallied over 80% close to my TP, slam dunk. It dumped. So that is just it. So for Bitcoin, I'm just gonna wait. Potential buys could be above here. Okay, let's see what price will do. But on the other hand, you can wait for price to retest. Price is in a strong zone right now. Okay, price is in the demand zone. On the daily, okay, that means we are in buyer's territory on the daily, buyer's territory on the 4 hours. If it breaches this high, we're anticipating price to rally. Again, I will keep here as my safe zone, because everything above here just is appearing like faker. This is what I mean. Price opened here, went high, came down, and closed here. Price opened here, went high, came down, and closed here. So this is how the candle looks. Open, close, weak. So this is now like an indecision candle on a higher time frame. Then this one opened here, okay, here, opened here, came down a little, went up, not to the, then dropped low, but did not breach this low, which is this low. Did not breach it, came up and closed here, somewhere here. So this is the open, this is the close. So this is what we got. So it's just like two indecision candles side by side, as if price was struggling to decide whether to go up or to come down. But if you put these two candles together, you understand what I mean. It looks like this, something of this nature. Looks like this. This one is under, but a quite bigger body than the previous one, like this. So as you can see, This is what? Bearish candles. Even if this was bullish, as you can see, because it opened here and closed here, this is certainly a bearish candle. Opened here, went up, closed below. This is a bearish candle. So as you can see, price is printing weak sells, because considering the size of the wicks versus the body, you know that buyers and sellers have been struggling somewhere around here, but the sellers are still weaker because of the volume of the body, or the size of the candle itself, not the wicks. So what I'm looking at is, we could take a current trend, like if this retraces, we could expect it to retest the low. But if we get trend continuation failure, then we expect price to do what? Go up. This is a little bit advanced. I just said let me chip in how to get candles from candles. So let's just say let me chip in some advanced stuff here. But I'm going to stop here right now so that this doesn't get too lengthy. And the attention span of the current age is dropping, which is not very good. But we got to make do with what we got, right? So this is it for now. For Bitcoin, let me see some retracement, then slam dunk to retest the low. If we continue dropping, then that means this is our area we should be skeptical about or careful. We're already in an area where we should be very careful. So safe buys will occur above here. So I'm not going to preach to take sales until we've gotten some retracement, then take sales to retest the low. I'm not going to preach buys until what? We are above this level, or this our zone I created here from here to here. So don't touch any buys until we get above here. Don't touch any sales until, in fact, just leave sales for now. Okay, concentrate on the buys. I know there is a sweet spot here which sales could occur, but unless you want to place your TP and not close it manually, because this could give us weak, then turn up, okay, or it could give us break and bearish breach, whichever one comes first. So I'm going to stop here for now. Don't forget to subscribe. If you're new to I'll be posting this on my YouTube channel. Don't forget to hit that notification button after you've subscribed, comment, and finally like. This is what I ask from you. This is your dues. Okay, subscribe, hit that notification button afterwards, comment and like. Okay, learn how to trade without using indicators, without using even trend lines. Read price action, interpret candles. There's nothing that could be more naked than this. Okay, they learn how to strip the market naked and gauge the figure of the market. If it's slim, if it's voluptuous or plumb, you just know what to do at one particular time. Okay, so we're going to stop here for now. Don't forget, your one and only Pips Collector. Peace.